Good morning and welcome to our presentation on the May jobs report for 2018. These numbers were released yesterday. As you can see, this is how we present the data. We show wages, average weekly wages along this yellow line. We show the prior month job creation here in this blue field, and then we show May, the current month, or the month we're reporting, which was May, in red. We show the number of jobs created in thousands over on this rightmost vertical axis. We show the average weekly wages for each of those jobs along this left vertical axis, and then along the horizontal axis we show each of the categories of sector occupations that are reported. So this was not a this was actually a pretty good jobs report. It was 223,000 jobs. That is up from the prior month, which was 157,000 as I recollect, and 155,000 in the month same month, May of 2017, so last year. So overall, not bad. The downside of it is that the average weekly, the average 3-month jobs for May was reduced to 179,000, which had been running for above 200,000 for the 3 prior months, so showing a stronger sign of the economy. There are also some other metrics that we're not real crazy about as well. I'll get into those a little bit in this presentation. If you want to see the entire discussion, I would suggest you go to our Seeking Alpha report that we put out monthly. One thing that does concern us is the narrowing of the yield curve, and here toward the end of May, the yield curve narrowed precipitously, more than it has in several years. We use the 3-month and the 10-year based on some old research from the New York Fed that indicates that a recession is more likely when when the yield between the 10-year and the 3-month goes below 120 basis points. Well, during the end of May, it moved below 90 basis points. So we're seeing increasing flattening. Just to go over this chart, 3-month is here, 10-month is here. The difference between the two, the spread is here. Here you can see the 3-month was increasing based on the actions of the Federal Reserve, which has been trying to boost rates since March, interest rates. But here you can see that toward the end of May, investors started fleeing the equity markets and going into treasuries. That reduced the treasury yield, more money coming in, less yield, and that in turn lowered the spread between the two down below 90. Now it's picked up a little bit in the last days of May, and it picked up again, I think, on the 1st of June, but it's troubling. It shows to us and supports our thesis that the Federal Reserve should really wait out until we have a consistent period of 2% inflation over several months before it starts jacking up rates again. We first report our monthly jobs report here on our website. StuySquare, StuySquare.com. We first report it here under the client advisories, under flash reports. We show this video at the opening screen. This is for the fourth quarter of 2016. It's dated, but you'll see when you go to the page that this video is leading the page, or something like it. We then report our jobs report and our GDP reports on Twitter, which is our account here is StuySquare. We then report it on LinkedIn, the Stuyvesant Square Consultancy. We then display the data in our Facebook page, which is the Stuyvesant Square Consultancy. Finally, we do a detailed discussion of the jobs report in a website called seekingalpha.com. This just requires a sign up. It's otherwise free unless you want premium content. We go into considerably more detail here than we do here in these videos. So check us out. We're at seekingalpha.com, and I am your contributor, J.G. Collins. You will find me on Seeking Alpha. If you wish to subscribe to our mailing list, you can do so here. This is our web page. This is under Contact Us and subscribe to our mailing list. You just enter your email, your name, what have you, and post the subscribe, and we will put you on our monthly mailing list. That concludes our discussion of the May 2018 jobs report. We'll be back in July with a discussion of the June jobs report and the GDP as well. If anything breaks in the meantime, you can find us here. This is our webpage. Again, it's StuySquare.com. We're on LinkedIn at the Stuyvesant Square Consultancy. We're on Twitter at StuySquare, and we're on YouTube at the Stuyvesant Square Consultancy. We also have a Facebook page, the Stuyvesant Square Consultancy. Take care. We will see you in July. Thanks.